We'll call to order. It's bond day, big day. I guess we'll start with the approval of minutes for the July 11th, 2024 monthly meeting.
So moved.
Do I have a second?
I second that motion.
All in favor?
Aye.
So any opposed? Okay. Section 3, public comments. We have some time if anyone would like to ask any questions or make any comments.
Everyone's quiet. All right.
All right, we'll move on to 4. Initial resolution authorizing the issuance of not to exceed $85 million in aggregate principal amount of public facility revenue bonds, stadium project, Series 2024A, public facility revenue bonds, stadium project, Series 2024B, federally taxable and subordinate lien public facility revenue bonds, stadium project, Series 2024C of the Sports Authority of the County of Hamilton and the City of Chattanooga, Tennessee, SA 026. Jermaine?
Yeah, good morning, Mr. Chair. Jermaine Freeman from Mayor Kelly's office. We have a couple of presentations that we would like to share this morning. One presentation will be sort of led by Mark Mamentov, who has been serving as our external TIF and bond counsel. Mr. Mamentov is going to sort of take you through, kind of just as a reminder, the background and structure of the financing as it was reflected in the economic impact plan amendments that were approved by the City Council and the County Commission in mid-June. And then following Mr. Mamontov's presentation, we have representatives here from PFM Financial Advisors who serve as the financial advisors for both the city and the county. And then we also have Ms. Marquita Bradshaw from JP Morgan to sort of go through kind of the nuts and bolts of the bonds themselves. And so with that, I would like to invite Mr. Mamentov up to sort of kick us off with the first presentation.
Good morning, as always. Great to see you all. And I'm going to try to be brief, which I know you know that's unusual for me because we have some great folks here to speak to you from JP Morgan and PFM. I just wanted to set that stage a little bit, if you don't mind. Just as a reminder, again, they're going to focus on those bonds that are listed at the top. Remember, we have the $80 million of Series A, Series B bonds. The tax-exempt bonds are payable from the public revenue sources. The taxable bonds, right now, roughly $15 million would be paid from the lease revenues. The Series C bond, which is not what we're going to deal with today. That is why we ask you all to meet the week of the 26th. I think we're shooting for maybe the 29th. That would come up at that point. And then the last source of financing, as well as roughly $1 million of interest earnings, are the tax increment revenue notes being issued by the city IDB. We met with them on Monday, and they're going to come back on the 26th to consider that, hopefully, obviously, to approve that. That's $26 million that the team, $16 million, and the site owner, $10 million, would be putting into the project. As a reminder, here's our sources of payment. Got the sales tax revenues from the stadium site itself, which is 6.115 or something like that. It's basically estimated to be somewhere between, say, $700,000 and $900,000 a year to start. Obviously, inflation, sadly, will help that over the life of the financing. We have the rent from the team that you've heard about a lot. We have the tax increment revenues from the city, the tax increment revenues from the county, with any shortfall being made up on the $80 million equally by the city, county, and the shortfall on the $5 million C bond being made up by the city. Again, this is a summary of this. I will obviously send you, or Maria can send you these presentations if it's helpful, but this is a summary of each series and what it's paid for since JP Morgan and PFM will be going through this. I don't want to force you to spend too much time on it. I always find boxes and arrows help. So the indenture, which is in front of you today, this is what it addresses. So as the sales tax revenues come in, they come in monthly. The state looks at our sales tax revenues off the stadium site, and then they'll pay them Typically, it's roughly 45 days in arrears from when they come in. So they'll go into the Sports Authority to your bond trustee. They'll be put in a sales tax account. The team rent will be paid semi-annual. It'll go into the bond indenture semi-annually, and then it'll go into an account called the team rent account. The growth on the team rent, the 1.5% will go into the capital reserve. And I've not really got into that here because we're talking about financing today. The most complicated part is the tax increment revenues. The county's tax increment revenues legally flow through the county IDB to the city IDB, and the city's tax increment revenues flow directly to the city IDB. They'll be bundled and sent to your indenture trustee, U.S. Bank, who will hold them into distinct accounts so that they're segregated so that they can track what they do with them. And then once they've been applied, and hopefully we will have excess, that will have synergy between the revenue sources and the debt service in a few years. And again, our friends at JP Morgan and PFM will be discussing this. The excess, the county tax increment revenues will go back to the county through the same direction they came. I'm sure we're going to be able to work out some more simple way to do that, working with Lee and his team. And then the city's excess tax increment revenues would go back to the IDB to use to pay the TIF notes. And once they're paid off, then they would be retained by the city. I made a list of some of the questions that we got in preparation from the meeting. And so your exposure on these bonds, obviously, is you have no assets other than the stadium, no disrespect. I just want to remind you all that you personally have no obligation on these bonds, either as a board member or an officer. The documents will have that big bold letters that this is a non-recourse obligation to this board. There's really, we'll have indemnity from the team for any operations. We've talked about that some. So we'll have insurance for slips and falls and things like that for the team, and indemnity from the team. We don't have any other general indemnity. Really, the only other parties that could do that would be the city. And my friend Phil, I'm sure, would chime in that generally municipal entities in Tennessee don't have the legal authority to indemnify in Tennessee. So it's really, but we will have very good insurance that the team already maintains at their existing stadium, I'm sure. But Rich has assured me he leaves no banana peels out for people to slip on. So, but we will have that protection. One thing that we're going to hopefully discuss at your next meeting when we do the Series C bonds too is a budget and how that's going to work, the financial aspects of that. Javed, and we already are missing Vicky. I'm sure Javed would tell you that, but his team is ready, obviously, to provide the financial accounting supports you need. I think you will want to have a budget. We're going to need an audit starting in this fiscal year, and that probably will be the main budget item. You're going to want to track construction and track the draws, and some of you will probably want access to the financial statements. That U.S. Bank will have a portal. You'll be able to track that and what's on deposit. And so that is a subject that I think we'll need to get into more, and sort of how that's administered, how the city will provide support for you all from a financial capacity standpoint. JP Morgan and PFM will discuss the bond process and the sale. We are using a negotiated sale. In other words, JP Morgan will go to market and sell the bonds and then commit to you all that they will buy all the bonds, and then it's their job to resell them. When the city issues bonds, as Ms. Madison knows better than probably anybody else in this room, you typically would sell them at competitive sale. In other words, you just put them out for market. One thing that they're prepared to talk about is why are we suggesting a negotiated sale, and why it would hopefully result in better rates for the for the Sports Authority. That was sort of my topics I meant to discuss. Any questions before I turn this over to our friends at JP Morgan and PFM? Marquita, you're going to be next?
Mark, one question on the front end here.
Yes.
We have 3 resolutions this morning on the agenda for the.
Oh, my
bond.
goodness, I didn't get to my last slide.
Yes.
You're trying to help me out. Thank you. Look at that. Things have,
And the first resolution, the initial resolution, has got a reference on here that it's going to be published in the newspaper and having general circulation for one issue. Is there any particular timing for when that occurs?
no, and that's why I'm so glad you said that, Phil, and I'm embarrassed that I forgot my own last slide is, so what are you doing today? One is the initial resolution that Phil, which has got to be one of the stupidest things in the world and a total waste of money, other than we have our friends from the newspaper here and we are providing financial support so that he can cover the meeting, which is a good thing. But the state law has this history of publishing initial resolutions. For general obligation bonds, and I'm pointing to Ms. Madison because I know she knows this, you put it in the newspaper and you have a 20-day period which people can protest. Theoretically, you could protest a general obligation bond issue. There's no protest here. It's purely to let the world know that we're planning on issuing bonds, and there's no time frame, there's nothing, we just have to publish it before we close our bond issue.
Okay.
So if it's adopted today, we'll work with your office and get it in the newspaper, but there's no consequence, or it's really to meet a legal technicality under Tennessee law, which is kind of funny. The 2 bigger and substantive resolutions are the resolution authorizing the bonds, which is the main documents or the indenture, the bond purchase agreement, and authorizing the distribution of an offering document, which is, you've got a copy of, is right now the preliminary official statement. Once rates are set, it'll be finalized, it'll become the official statement, and that is what will be out in the cyberspace for the next 100 years. And then then there's a resolution on interlocal agreement. We'll have another one at your next meeting on the Series C bonds, dealing with the financial support that I talked about and financial aspects. But then this one is after we changed the structure, that after we worked with the county, the team, the site owner, and the city to redo the financing structure, we've never finalized the agreement such that the excess tax increment revenues flow back to the county, how they flow back to the county from the Sports Authority, really coming from the bond trustee, and how they flow to the city IDB. This agreement, that's the purpose of that agreement, is to fill that gap. So thank you, and I'm sorry.
All right.
Let me sure I don't have any other slides. No, that's it. So,
Okay.
so that was good. Thank you all.
All right, thank you.
Thank you.
I'll give you the thing.
Thank you so much. I did pass out hard copies of our presentation. Hopefully you have that. And I think we're also going to pull it up here on the screen. But good morning. My name is Marquita. I work in JP Morgan's Public Finance Group. I am located out of the Atlanta office, and I've been in the industry for about 20 years. And I'm just going to walk you through the transaction a little bit. Mark already provided a lot of information. Let's see if I know how to use this. Perfect. But just going to sort of walk you through the mechanics of the bond offering. I think traditionally you all are familiar with, or at least some people on the authority are familiar with the competitive process, but this will be a negotiated process, which is slightly different, and there are some clear advantages to that we'll walk through. But on page 1 here, Mark sort of hit a lot of this information. The authority will be offering $80 million of bonds between 2 different series. The first series is a tax-exempt series, around $65 million, and the second series is a taxable series, around $15 million. The reason for the taxable series is that those bonds will be secured by the team lease payments, which means that they need to be taxable. This will be a roughly 30-year obligation, a fixed-rate obligation, so at pricing, the interest rates will be fixed. Nothing will change after that, very similar to a mortgage that someone would enter into when they're purchasing a home. The principal amortization, basically when the bonds start paying down, principal payments will start in 2027 and end in the 31-year mark. We have the concept here of capitalized interest, and that basically means that interest payments will be paid from the sales tax revenues, the TIF revenues, as well as the team lease payments starting in actually 2027. So gives a little bit of time for the construction to kind of get done and the project to be up and operating before interest payments are made out of the pledge revenues. There is a feature here that is pretty traditional for municipal obligations, and it's what we call a 10-year redemption feature. So the bonds can be refinanced after 10 years, potentially at a lower rate. Similar to how you would do with the home mortgage, you can refinance that at a lower rate if it makes sense at that time. We do expect credit ratings of AAA, and that just reflects the credit strength of the city of Chattanooga and Hamilton County, which is where their ratings are today. We are assuming that we only get one rating from S&P. We're looking at pricing the week of September 4th, which is the week of Labor Day, and there are some advantages to that I'll walk through later, with the closing on September 18th. What you see to the right is just the amortization schedule for the bonds, so that's when the bonds will be paid down. And I promise I will not go word for word on the following slides. So here on page 2, outside of the Sports Authority, which obviously is the issuer of the bonds, we've listed some of the other participants in the transaction. Obviously, the bonds will be backed, have a backstop from the county and the city. As Mark mentioned, PFM is the municipal advisor. Mark is serving as bond counsel. JP Morgan is senior underwriter on the transaction. We are partnering with other banks on the transaction in order to facilitate the sale of the bonds. And those banks are listed here as co-managers. We have Academy Securities, Estrada, Sieber, and FHN Financials, which is a really good syndicate of banks. It represents some banks that are regional, some minority banks, and we'll partner with them to ensure the bonds are priced and distributed to investors. We have our own counsel, and that's Carpenter Law Firm, and that is a minority firm located out of Memphis. The next section here is just a market update. I am not going to walk through each of these bullets, which would be pretty painful. I'm sure all of you all have seen some of the volatility that's been in the market, particularly in the stock market. Interestingly enough, that volatility has created some advantages in the bond market. So the stock market hasn't done relatively well, but as a result, bond yields have decreased overall, which has been great for issuing clients. So that's been something that has worked to our advantage. We've listed some of the market moving factors here on this slide. Obviously, people are watching to see what the Fed is going to do, whether they're going to cut rates coming up in September. They're watching the labor market. Last week, the unemployment rate went up, which was a surprise, weaker than expected, which sort of kicked off the volatility that we saw in the equity market. And then people are keeping an eye on inflation. The reason why we highlighted these is that it's very important that we continue to track these as we head into the market. And most of these are, their data releases associated with these. So obviously we know when the Fed will meet and when they'll come out with their, whether it's gonna be a cut or whether they're going to hold rates. There are certain points in time where unemployment rates are released and inflation data is released. So the PFM team and the JP Morgan team will work together to ensure that we're not sort of in the market around those times, because the market tends to react pretty aggressively as of late to some of those data releases. So we'll sort of look at the schedule on when these data releases are coming out and try and manage our pricing around that. The good news, as I mentioned, is that rates have kind of gone up and down over the last couple years, but relatively speaking, over a 30-year basis, rates are relatively low. Over the last 30 years, I would say our tax-exempt interest rate average is roughly 4%, and in today's market, it's around 3.5%. So it's still a good time to borrow. We're doing, good bond deals in the market, and they're receiving very, very strong investor interest. Page 5, we just show taxable rates, which are treasury yields, and I would say the same thing about these rates as well. Historically, we're still in a very low interest rate environment. This is what we like to call sort of our crystal ball, our prediction of where rates are going to go. We're relatively close to the issuance for the bonds for the stadium. So, over the next several weeks, we don't expect a major movement in rates. And I would say pending some sort of data release or activity overseas. A lot of investors and market participants are keeping their eye on the November election. So I think that the timing of issuing in September is great because we expect some volatility depending on the outcome of the election in November. So we're sort of getting ahead of that. Last here, I'll just wrap up on the process and next steps. Love boxes and arrows, like Mark said. We've sort of completed the items that are listed here in green. We know our objectives. We've assembled a team. We've worked on the bond structure. Right now, we're in the process of developing the documentation to offer the bonds. We call that the preliminary offering document. The city and county have engaged with the rating agencies to make sure that the ratings are secure for the bonds. We're finalizing the bond structure, and as we are here today, we're getting the necessary governmental approvals to move forward. Beyond that, we will have a due diligence session with the city and county, just understand their financials, given that they're providing a backstop on these bonds. We will post the offering document, and that document will go out to potential investors that are interested in buying the bonds. We'll market the bonds, price the bonds, and close the transaction in September, as I mentioned. The information on this slide and the next slide is much of the same. I will say that the distinction here compared to what the city and the county have done in the past for their geo sale is we are doing a negotiated sale. There are clear advantages to that, particularly when you're doing more of an economic development transaction versus a general governmental borrowing for roads and street improvements or something similar to that. Investors really want to understand the project and what's going on with the project. And it's very helpful via negotiated sale to engage with an underwriter such as JP Morgan so that we can kind of tell what we call that credit story to investors, so they understand that this project really is an essential project for this area and how important it is. So that's the clear advantage of doing a negotiated process. Again, just more information about what we'll do here in the next few weeks. We'll post the offering document, the investor presentation. We'll do a teach-in with our sales force so that they are educated as they speak to investors, and then we'll look to price the bonds in September. We have included here some of the investors that we expect to participate in the transaction. We look to investors that have bought the city's bonds, the county's bonds, and investors that have bought other minor league baseball stadium and football stadium bonds. Here in Tennessee, we had the pleasure of working on the Knoxville minor league baseball stadium transaction, and also we were engaged on the Titans new stadium transaction as well. And we expect some of the same investors that participated in those stadium transactions, as well as general investors of the city and county, to be active participants in this transaction. The last slide here is just an outline of the debt service payments that are expected for the bonds. As Mark mentioned, the authority has no obligation to make these debt service payments. These will be paid from sales tax revenues, TIF revenues, the team lease payments, and if there is any insufficiency from the city and county. What we show here is that the approximate annual payment across both series is about $5.3 million. With pretty healthy coverage just based on the sales tax, the TIF payments, as well as the team lease payments. I think that brings me to the end of my presentation. I would like to see if Lauren from PFM has anything to add, or if there are any questions from the authority. Perfect. Thank you.
Thank you. A vote.
Need to do, we've got three, we can do the first one on here, which is the initial resolution first on the vote. Yes, sir.
Okay, calling SA-026. Do I have a motion?
So moved.
Second? All in favor?
Aye.
Any opposed? Okay.
Okay. We can do the second one and probably ought to read that caption anyway.
A resolution approving the authorization, issuance, and sale of public facility revenue bonds, stadium project series 2024A, and public facility revenue bonds, stadium project series 2024B, federally taxable of the Sports Authority of the County of Hamilton and the City of Chattanooga, Tennessee, approving the execution and delivery of a trust indenture and bond purchase agreement relating to said bonds, pledging certain revenues of the authority to the payment of the bonds, authorizing the preparation and distribution of the preliminary official statement and an official statement in connection with the sale of the bonds, SA-027. Do I have a motion?
Mr. Chair, I move for approval of the resolution authorizing the issuance of these bonds.
Thank you. Do I have a second?
Second.
Okay. All in favor? Aye. Any opposed? Great. Section 6, resolution of the Board of Directors of the Sports Authority of the County of Hamilton and the City of Chattanooga, Tennessee, authorizing the execution of an interlocal cooperative agreement, transfer of tax increment revenues to and from Sports Authority with the Industrial Development Board of the City of Chattanooga, SA-028. Do I have a motion?
I move approval.
Any second?
Second.
All in favor? Aye. Any opposed? Okay. 3 for 3. Do we have any other business to discuss?
I would just like to comment, if I may, that it's really kind of exciting to see this project actually getting, putting the boots on the ground. I was very impressed with the opening and very much looking forward to going to games out there. Going forward as well, we are going to get into the meat of things, and so as members of the board, we look forward to having those reports and the data that keeps us informed from a financial operations, construction perspective, so we can all stay excited. So thank you, everybody.
I want to
for all your
second
hard work.
that. There's tons of excitement in the community about this project, and I know this is like years in the making from so many people behind the scenes, so thank you for everybody involved. If there's nothing else, I think we'll adjourn.